to Power Charting. I am your host, Bruce Frazier. Greetings to my Wycoffian friends. We are going to do one of the things we love doing the most, and that is tape reading the Wyckoff way. This is the second workshop that we've done. We did one 2 weeks ago. We are going to keep going with this because this is the most fun that a Wycoffian can have. Moving on, just an announcement very quickly, trading through the business cycle. The amazing Joe Turner will join me for this part 2 workshop on managing trading through the business cycle in the era of inflation. And you will be dazzled by Joe's immense insights into the nuances of business cycles and their importance to us tactically, financially, as we go forward in time, especially if things are changing from the disinflationary era to the inflationary era. Go to wyckoffanalytics.com to learn more. Now, just some brief insights into the current market, and we will go through these very quickly. We look at these charts often, and I want to point out here for the NASDAQ composite that we have an upward trend, actually a fierce upward trend from October to the end of the year, and then follow through in 2024. And that is not uncommon, is to have a very strong move in the quarter, have that momentum carry through into the new quarter for a few weeks. I like to say it's plus or minus 3 weeks of the end of a quarter where this can happen. And so I think you will discover that this last run up is very much dominated by the Magnificent Seven style growth stocks, because note what's happening with the advanced decline line. Is a 10-day moving average, and it has continued to show a persistent divergence. And here it did not even get above zero on this attempt to push up to new highs, which everybody's very excited about. Now, the down volume has backed off after being very strong. A lot of selling into the end of the year, tax related, I'm sure. And the up volume did start to go up, but they have not really crossed. And then also, if you just net these two volume numbers together, a series of lower highs while the index itself is making higher highs. I've added another index here on the bottom. This is the net new high, new low index for the NASDAQ composite. This is all the NASDAQ stocks, as are these other indicators. And again, lower highs throughout. So the internal high of this market was really right about here, and then lower highs, lower highs. I think the trouble starts for the new high, new low index when you get below the zero line and stay below it. And that is a period where you can start to have some trouble. Well, note where we are. We're knocking on the door of the zero line from above. And if it starts to go below, that could be associated with a downturn for more of these NASDAQ composite stocks. It may be that the Magnificent Seven just continues to work its way higher, somewhat masking the tape. The general's march alone is the old term used about the leadership walking uphill against a broad list of stocks that is not going uphill. And so we seem to be seeing that now. We will watch this new high, new low index quite closely. Looking at the New York, a little different picture. And so we see, I won't belabor this, but again, divergent characteristics on the net advanced decline line itself. It's rallied up to just the zero level. But look at the NASDAQ, or in this case, the New York Composite. The New York Composite Index is not making new highs, not trending higher, because these large cap growth stocks are not in the New York Stock Exchange index. And you can see that this has maybe the characteristic of a local near-term distribution, and that it could result in some kind of a turn down. And we see a little sign of weakness here, followed by a rally into a last point of support, a supply. And then from here, if we start to see weakness come back in again, this could result in some kind of a more of a correction. Again, we think we're in a trading range in the first quarter, and that it could just be listless and go sideways. Time will tell. We'll watch the tape to help us determine that. Here is the advanced decline volume, and note how the advanced decline volume continues to go down lower highs, even though we've had a pretty good rally in up volume here of recent, which is a good sign for the future, but nonetheless, the net volume continues to be down. New highs, new lows. Again, just as the case with the NASDAQ composite, lower highs throughout here. And again, it's not at the zero line, but it continues to diverge, as was the case here. And you can see higher highs in this area. And we did not get a divergence here, and still we had a correction downward. And so we just want to be very, very aware of our surroundings. What's the background environment? Are the risks being elevated by background conditions? And then we just want to be good risk managers. Tighten up stops, be careful, manage our position sizing and so on, and just be on the ball, even though I'm sure because of the way the tape is trading, people want to be long this market as it makes new highs. No criticism of that at all. It's just we want to be aware of what's going on in the background. Here is the two favorite breadth indicators we look at often. This is the stocks above their 50-day moving average. I think the trouble starts when you get below 50, which is about this level, but note that we have a divergence, downward trend taking place in stocks above their 50 on the NASDAQ. And so you can see that we had downward directionality in the past here, and it can lead to trouble. And so here, this is being dominated by those mega caps as they go higher and higher. But this means the broader list of stocks in the NASDAQ composite continue to weaken. So the probabilities of success start to diminish because fewer and fewer stocks are above their 50 and trending upward. So we want to be aware of that in our portfolio management. So we see overbought conditions on the New York Stock Exchange. Same story. Stocks above the 50 is in a downward stride, working its way. Here's the 50 level, still well above it. And we just looked at the New York composite, and that it has sort of a sideways type structure to it. May break out to new highs. We'll have to see. But again, this says the probabilities of the stocks you're in continuing in an upward trend has a headwind. And so keep that in mind as you move forward. Last chart on the current market. This is the S&P 500, and this is the upward trend channel that we've been working with. We have been tracing out, as you've followed me over the course of the last couple of years. This is a beautiful accumulation structure resulting in a beautiful markup. Came down through the bottom of this channel once into key support, into an LPS, last point of support. Beautiful rally into the end of the year, largely dominated by the mega caps, but more broader involvement by more of the blue chip type names, which is very encouraging. But we are now running up into the top of this channel, and this is being driven by fewer and fewer stocks. Here's the New York stocks above the 50. We just looked at this indicator. We see that it's turning down southward direction as this is pushing up, which is a divergence. So we want to be aware of the rising probability of stocks in the market, not in an uptrend any longer. Now, let's move on to our tape reading. We're not going to cover all this today. Let me just put all these notes up here so that we have them. And but we're going to concentrate on the accumulation area of the market here, and the idea of volume confirming. We want volume to confirm accumulation. I'm going to show you an example today. And so let's move on to that. These are Wyckoff's rules. Please screen capture this and have these rules available to you. Read them, study them, memorize them. And as we do these workshops, we're just going to keep circling back to these all essential content and concepts, and go through them over and over and over again. And let me just say, we Dr. Pruden and I taught these classes for 27 years. We taught tape reading as a bar by bar analysis of the market with volume. They go together, and inevitably students would come to me and go, Professor, I'm just not seeing it. I'm trying to apply these principles. I can't. I'm just not seeing it. And all I would say to them is, please just keep practicing. Practice. Because the more charts you look at, and the more you look at these relationships of price and volume, the more that you will start to connect the dots of how these fit together, and it will become less complex to you. There will come a point when you'll look at a stock chart and you will automatically be using Wyckoff's rules without even thinking about it. You will have installed it to the level of subconscious competence. And so please just keep practicing, and it's going to benefit you greatly. This is a blog that I wrote back in 2015, and this actually was from a case study that I did in class in 2009, and this was the big accumulation structure in Apple. And so I just want to illustrate a couple of key concepts with this, because we went through this bar by bar, week by week with students, and then I wrote a blog about it for Wyckoff later on. And you can go back and read that blog in the archives. This accumulation schematic, which shows a spring here, is what we are relating this to. I want you to pay particular attention to the concept of phases. And these phases are so valuable, so important. They give us context, and the value of context, which you can see right here. The value of context is so important in Wyckoff. It's unique to Wyckoff. Now, what I want to do is I want to make a couple of just basic observations about this chart. Go read the blog if you can, and go through and look at the concept of price and volume, price spread, and note that, for instance, here you can see volume is quite low right here on this last little pullback before an attempt to rally, which is a failed attempt, but note the volume expands. And here you can see that the volume is trying to go up from the prior bar. So we look at the prior bar, we look at the prior last few bars, and we look at volume in context to itself. Then a decline comes in. There's very generally widespread ease of movement down to the area of support. Support is defined by the selling climax low here. And this, look at how that selling climax low defines the all-important support all the way through this structure. And down this goes. Look at the very high volume that comes in on this day here. The thing to note about this day is that's a hollow down bar, which means it closes in the top part of its range. It closes above its open. This is an open bar. And then we see here that there is good demand in that bar because it gets below support, and there's bids that actually are able to hold this bar up. But it's still a bar that needs to be tested and may eventually have a much deeper decline. There's still plenty of questions at this point, but we see that the next two bars, which are down, volume diminishes. That means supply that came in here, well, and we think there's demand here, is then followed by diminished volume, which shows that supply is drying up. Then something very special happens here, and that is that volume expands with a rising bar. This is a widespread bar with higher volume than the down bars that preceded it. And you can see that the next bar is a, again, widespread, higher volume, very good demand. We think this is CO buying occurring in the bottom of the structure. And then up it goes. The volume tends to fall off as it goes up, but there is movement to the upside. We see this as bullish. Then we have a very high volume bar here, and we have widespread, but this high volume stops the advance temporarily. Look at the response to that move. Volume is quite low on the two down bars. Spread does not widen appreciably, and then it starts to go back up again. Volume is good on the way up, and it rallies up to the top of the midpoint of this all-important resistance level, which has stopped the market in Apple in the past. We call this a minor sign of strength. This results in another decline down to the LPS. This is phase D. Wyckoffs do all of their accumulation work in phases C, D, E. And so here we see in phase D a decline. Look at this long, persistent decline to support. Not uncommon because accumulation is not done. The CO is still trying to loosen supply out of the market to accumulate shares. Then all important is look at this turn off this LPS low here, very high volume here, and that produces a low at support, demand present, has a little bit of follow through the next day, cannot get through the range of the prior day bar, volume diminishes, supply is exhausted. Then it turns up sharply, and we see that volume is coming in on the positive side with ease of movement bars up, wide bars, good volume. This is very bullish. These bars also are strong bars and take it above the key resistance level here. And note this time, it doesn't stay below. It doesn't fall back towards support. It stays here. And it has a correction, a consolidation, which we call a backup in this area. And the volume is diminishing on the backup. Best possible thing we can see late in accumulation. Then volume starts to come in with ease of movement up here, see it here, and it takes us to the higher resistance level where again, all it can do is stall at this area. It cannot return back into the accumulation structure. So bullish. And look at the volume dry up on these two down days right here. So I hope that helps. You want to go through this. It's like there's important bars, less important bars, but they all should be studied. So this is such a great case study. Go to this blog and read more. Now, we're going to look at a reaccumulation structure here, and it's with a really great staid old company. I'm just dazzled by IBM these days, which, you know, IBM has a history of reinventing themselves over and over and over again. And going back into the very early days of business machines and mechanical calculators, and then computers, selectric typewriters, the PC computer, on and on and on and on. And here they are doing it again, and I'm just dazzled. But the thing that we want to focus on here is the bar by bar analysis of this reaccumulation structure. right here. Now, note the downward stride. Now, this is a weekly chart we're looking at. Important point. This process, this approach of tape reading is fractal. It works daily, weekly, monthly, intraday. Whatever time frame you like to function in, you can apply these principles. They work over and over and over, from the smallest time frames to the biggest. So here we are with weekly, and you looked at a daily chart on Apple in 09. Well, now let's look at a current chart of IBM weekly. So you can see here, look what's happening as this, first of all, the relative strength here is in a downward stride on a weekly basis. This is generally something that we note, but it means it's not yet time to consider entering IBM. We want to enter IBM when the relative strength is in an upward stride. A little respite here, talk about that more in a minute. But this is going to be where our buying climax peak is, right here. And you can see the volume coming in the mid to late stages of this advance. And then there is generally volume is coming off as it's declining down. And this, I'm going to call this the automatic reaction. And this is where we draw support. So support is that light blue line. And then note what happens. I think this is very important on a weekly basis. Note the ease of movement of these bars here. Widespread bars, volume is high. Now, this is a little tip or trick, something that I put on all my charts, and I want you to consider doing this. I have a 21-week moving average. If it's a daily chart, it's a 21-day moving average. And I look at volume, is it above or below this 21-week moving average? If it's above, I generally consider that to be high volume. If it's below, I generally consider that to be low volume. I'm still comparing volume bar by volume bar as we go through this, but this helps me to delineate important bars from less important volume bars. So now here, this says to me that there's accumulation taking place in this structure through here. And because volume is high, does that mean that this structure is done developing itself as a reaccumulation? Not at all. But we will see demand come in if the CO is present and wants to own this stock. And so they are buying on a scale up off the support lows of the automatic reaction on expanding volume, as you see right there. Now, now that you've seen, I just want to put up this one schematic right here. And that is, and I should probably just clean this up. You will pardon me, but I need house cleaning. So anyway, here you can see, here's the automatic reaction, buying climax peak, reaccumulation structure. You've seen this over and over, but look at the family resemblance. So I think that here, this is the very long, protracted pullback towards support, higher lows throughout. I think that's this area right here. And then an attempt to rally up to the resistance area, which it does here and here, and then off it goes. So I think there is a wonderful family resemblance. Here's a backup after the jump, which occurs here, and then a higher pullback into this area, which we call another LPS. And so you can see these principles at work. Okay, now that you've seen that, let's go and look at this chart without all that on there. And again, here is the volume coming in and then a correction. Now, note that now here, look at this big bar that goes to resistance right here. Volume is quite high. High volume with a big spread is generally considered to be a positive. It goes up, volume diminishes in here and here a lot, which says that demand is being checked, it's being withheld, and we see also that volume is coming in on the downside here, which says we're probably likely to have to go back into the trading range structure further. High volume, big spread means we're likely to see lower lows in the future. There's an intervening advance. This advance comes on diminishing volume, and that is generally considered bearish, goes to resistance, and then turns off of this and goes down. Short sellers take note of this. Don't necessarily encourage short selling, but look at this redistribution. Look at this distributional structure right here. This is an LPSY test of this upthrust, and then down it goes. But it can't go to support. That's kind of bullish. And so now we see at this area an attempt to rally here and closes down. This is this bar is a down bar, big tail, but it cannot really appreciably get below the low of the prior bar. And so that's interesting. And then this bar here does get below, but closes in the top third right here. And the volume is, it's like, okay, volume, it's not great. And then look at this big bar here. But we take note of this because we like the fact that there were bids that came in along here. And this bar has widespread and high volume. And note what happens next is that it just starts to work its way up and out of this area. There's a couple of bars here, bullish bars above the moving average. We have ease of movement up, and then finally a very small narrow range and low volume here, which says that there's supply present at this level, and it very well could be a warning of an attempt to turn back down, which is exactly what it does right here. And look at the volume coming off that peak. So attempts to go higher, closes down, sells off through the whole course of the week, and then there's a rally attempt, cannot get back above the spread of this bar. Volume is very low right here, and you can see it follows with a supply present for a period of time, high volume into here, very widespread, high volume bar. And we say, well, this likely means we have to have lower lows in the near future, exactly what we get here. But the volume is low, ease of movement down on diminishing volume. So this is generally considered to be bullish. And then finally, we have at the low here, very, very high volume. And we say tight range, closes in the middle of the range, but down. And we say this could very well be demand. And then attempts to rally, comes back down for a test. And it's a higher low throughout. The volume on the test is diminished. And then up it goes, and look at the volume generally expanding on this rally up above resistance. The next reaction stalls at resistance, which is now support, and then goes higher. So all of this demand seems to be confirmed with the move out of the structure, and up it goes. The last thing, I'm going to let you study these bars. Look at the good volume coming in. There's demand all the way through here. Very light volume on this pause. And then again, more demand. How high can IBM go? Well, and then look at the relative strength reassert itself here. The last thing is, here is a point and figure study. And let me get my pen out just so you can see this count. Is a conservative count here to here. These two lows across here, this is 13 columns, 3-box reversal, 2-point scale, gives us a count up to 188,206. We're right into the middle of that now. So we may get a climactic surge and a pause, but we'll have to watch that to see whether there's distributional characteristics in it, or it's like we think the market could go first quarter basically sideways, and then better strength through the middle part of the year based on seasonality. But then we have a bigger count, and this goes all the way back to 2021, and that is, this counts 25 columns, it counts 254 to 268. So there is a higher count available to us for those that are looking for the campaign characteristics of IBM. And then the last thing I want to show you just is the idea. This is something always to pay attention to. Look at the 2021 peak in IBM. So it makes its high. It actually peaks out prior to the market, which peaked out at the end of 21. And so this is weaker, and the relative strength demonstrates that. And then note what happens in the first quarter of 22 as the bear market is unfolding, is IBM is making a series of higher lows and higher highs during a bear market decline in the broad market. And look at the relative strength just soar through this area. That is a total clue that IBM is marching to its own drummer. It's acting differently than the broad list of stocks. And this is something that draws our attention to IBM because it has relative strength characteristics in a relatively weak market. I want you to study these characteristics and actually make a chart, put the S&P or the Qs up against this and compare. But you can see it in the relative strength here also. And with that, I'll bid you farewell. Thank you so much for spending time. I hope you enjoy these tape reading talks. It's really the most fun you can have, in my humble opinion. And if you'd like more, let me know. Just leave comments or a thumbs up if you want more of this kind of material. And we will sign off with that and say, have a great week. And thank you so much for being here and attending Power Charting. Take care, everyone.